Yo, what's good? Just wanted to do another market update and talk about some trading strategies. So I wanted to talk about trading with an edge. So what is an edge? So if you go to a casino, for instance, all the slot machines will have a specific edge, and you'll know your chance of winning. Whether the edge be 2%, 1%, the house always has an edge. So what you want to do is try and structure your trades to where you have basically a probability in your favor. So you want an edge to your trade. So if you would take a look at this area right here, this area right here, and this area right here, this is just an example. If you were to enter trades at all these places, statistically speaking, you have an edge because you've made so many candle bodies above this area. So you got to think in terms of probabilities. What's the probability the price goes back up above these candles? Well, it's certainly higher if you buy below this line or around this line, as if opposed to buying up here. So you want to stack the deck in your favor every single time. That will give you an edge when you trade. So yeah, just think in terms of probabilities, and you got to be responsible for where you enter or exit. So say you entered right now, you just bought like an S&P ETF. Your edge to the trade would have been a lot better down here. Now there still could be upside to this trade, but in terms of probabilities, how far have you already moved with this momentum before you stall out? Or maybe it keeps going up, But what I'm saying is you want to find points where price is at, where there's a big discrepancy between what people think it should be. So obviously back in June when the S&P hit this value, everyone was like, there's no way stocks are valued that low. There's no way institutions going to put in bids, everyone else is going to put in bids, and the price shoots up. Same thing happened again when it hit its 200 week right here. People are like, no way it's worth that much, or worth that little. So here entering your trade has an edge. Or if you were to short right here, your trade has an edge. So you want to try and stack the probability in your favor every single time. Let's see what else. I had some other notes. So let's see. So yeah, I also wanted to talk about some market psychology stuff. So everything is driven by fear and greed. So you can see over here, a strong sell would be very fearful. Strong buy would be very greedy, pushing price up and down. And biases, cognitive biases, tend to anchor at prices where fear and greed is the highest. So as you're moving up in price, fear turns to greed somewhere about halfway. And then up here you're really greedy, and then what happens? You go back down to fear. So it just switches back and forth. But because it's fear and greed, people like to anchor, on, whatever the local bottoms or local tops are. What else? Obviously this channel is, we're not too organized here. We just try to go off the cuff because I feel like that's the most genuine way of presenting information. Yeah, so I'll just read you this out of my notes. So an edge in trading comes from places where there is a systematic misconception about what something should be valued, about a price. And that happens to happen because of anchoring. So let's look at Google. So everyone that's probably looking at Google right now probably is aware that it's sitting right above its 200 week after pretty much crashing for a whole year. So a lot of people are anchored onto this price. This is where a battleground in terms of the bulls and the bears is going to be. Can you hold this 200 week, or will you capitulate below and, I don't know, maybe you go who knows where. So if you can find an edge to your trade around a battleground, around a place where people fight over whether it's worth more or less, if you can find an advantage, an edge in a place like this, then you're going to be a successful trader. Because these are where people develop their cognitive biases. Right here, big price reference points. So if you look at, let's do some moving averages. well, this because I got the free version of TradingView because I'm kind of a noob still, but that's the point of this video, is to share what I learned along the way. So yeah, you're basically, I would say most traders are probably, you know, looking at these levels. You're getting squeezed in between your 50-day and your 200 week. So this is going to be a decisive area. You know, is Google worth a lot more and it's way undervalued and you pump up here, or does it capitulate? So if you can find an edge to your trade in areas where, you know, players battle it out, you know, then you'll be more successful. What else did I write? So scales. Oh yeah, I wanted to talk about log scales. So log scales or logarithmic scales make drawdowns like not look as bad. So if you go to Bitcoin, because I know a lot of people on YouTube like Bitcoin. So if you look at, let's get rid of this crap. So if you look at Bitcoin on the log scale, we'll go to the BLX because this is the older one. You go to the week, you have this giant curve that just basically shoots up. Oh man, get this crap off of here. But let's take it off of log scale and see what this looks like. I didn't mean for it to be that dramatic, but let's see. The log scale really tricks your eyes because it shows how things are an exponential function in some ways. So this is a lot more representative. Or I feel like this is a lot more accurate visual representation as to what's happening with Bitcoin. Right now, you're at a place that is an anchor for a lot of cryptocurrency people. This is a place where a lot of cognitive bias comes in, right? So in turn, it is also a great place to try and find an edge for a trade. Because the bulls and the bears have a lot of discrepancy over if Bitcoin is worth, you know, way less than 20K or way more than 20K, this makes this technical level basically a battleground. I also wanted to show you Bitcoin versus gold. Now, a lot of people, you know, like to say that Bitcoin is gold 2.0 and, you know, it'll be the next super mega awesome thing, put all your life money into it, whatever. You hear all sorts of things about Bitcoin. But this is a chart of Bitcoin divided by gold. And you can see it pretty much looks the same as Bitcoin's chart. But that's not what I wanted to illustrate. What I wanted to show you is, let's see if we can do it here. There it is since inception, and you're kind of sitting near the tops of December 17. And what I also wanted to say is, so when did Bitcoin start? My chart goes back to 2010, 2011. That was pretty much the inception of Bitcoin. And we only have so much data here. So if you're in cryptocurrency, you look at this Bitcoin chart and you think, oh my God, this thing is just ripped up against stocks. I mean, this thing just like makes stocks look like, stupid. But what I'd like to point out is that Bitcoin was essentially launched in the recovery phase. All right, here we go. Bitcoin was launched in the recovery phase of the financial housing market crisis. So Bitcoin was like created like around here-ish. So as you can see, this has been the stock market since Bitcoin's inception, up 200%. This is the Dow. So it's like it's kind of like the blue chips, I would say. So the blue chips are up 200% in the past over Bitcoin's lifespan, right? What happens when stocks decide to do one of these or one of these or one of these? There's really not much of a historical precedent to understand what Bitcoin is going to do during a recession, because we actually don't really have enough data on Bitcoin itself. We have data from Bitcoin starting here, okay? Stocks went up a shitload that whole time, okay? So what I'm saying is, if you believe there is a recession in store and you believe that you need to protect your capital, I don't really think there is enough data to draw the conclusion that Bitcoin is better than gold. I really don't think so. Because, you had the COVID crash, which was here, but immediately after that flash crash, a lot of people forget, the United States government printed like trillions and trillions of dollars. And what happens when you give stimulus checks and free money to a bunch of fucking people who, don't necessarily need it? They buy upgrades for their Jeeps and they buy Bitcoin. I was one of those people. Let's be real. So you increase the overall liquidity of the dollar, and people bought stuff like Bitcoin, speculative shit, because they wanted to get rich. Maybe you did make a bunch of money. Right now they're tightening. Bitcoin hasn't really ever seen a recession or a tightening cycle like this. Like, there's literally not even enough data to draw a conclusion about Bitcoin's validity against stocks or the regular markets. So that's really kind of what I wanted to say to you guys. Everyone likes to they like to show you the stock to flow model. They like to show you the exponential log curves. But no one goes back and says, oh, look, Bitcoin was born literally right after one of the biggest crashes ever, and it's been pumping since then. Bitcoin born right here. Okay, stocks went way the fuck up. Okay, what happens when stocks don't do that? Okay, Bitcoin has been going down in tandem with stocks thus far. What if stocks keep going down? Is Bitcoin really gonna? This is the test. This is the test. We're seeing it in real life. We're in the middle of a financial reset. Is this cryptocurrency plan B, as all the Bitcoiners like to call it, is it really gonna work? Anyways, my food is burning and I have to go fucking, cook that. So peace.